We're in conversation with right now is Sun TV, SL Narayanan, the Group CFO of the group, joins in now. Good morning, sir. Thanks for joining in. There are a lot of things to talk about. So let's start with your Q1 results. The double-digit growth in your ad revenues was on the back of a low base of last year. Do you see the ad growth sustaining at these levels? What can we expect in FY16?
Actually, the first quarter ad revenue growth came in at 15.5%. So it is actually quite a rousing start to this financial year. It will be very difficult to give any precise guidance as to where it will come off finally when the year ends. But I must say that all the confusions that were caused because of the cap on the number of minutes and the subsequent litigation, all that is now behind us. So I think the base effects are now fully stabilized. So from here on, I think we should see a fairly good growth ahead.
Mr. Narayanan, good morning. What's the target with respect to the subscription revenue? Because that was a bit muted for last quarter.
I mean, I don't recall the exact numbers, but there were certain quarters where our cable revenues had grown by almost 40%. And DTH revenues grew almost close to 20%. But this current quarter, we have not had any fresh, upsides, because Phase 3 digitization is now slated for 1st of January 2016. So unless there are some fresh triggers for any upticks, we are not going to see any rapid increases in subscription revenues. But I think the original core growth of about 10 to 12%, that should continue.
Before we move on to the radio business, just one final question about your Q1 performance. We saw your margins expand despite a higher than expected loss from the IPL business. What is your EBITDA margin target for FY16?
No, we don't put out any specific targets. But our endeavor will be to maintain the robustness of the legacy business model. You're right, basically the reported numbers are looking less than spectacular because of the IPL losses. Otherwise, I think the core business, which is basically driven by subscription and international revenues and ad revenue growths, that is looking pretty good this year.
Okay, so let's talk about the radio business, because there are some questions that we have regarding the Phase 3 auctions. Has Red FM's participation been smooth so far? What's the amount you have earmarked for these auctions, and where has the funding for that coming from? And how many stations do you think you'll be able to win?
I don't think we can say anything at this stage now, because I think the process is almost coming to an end. But suffice it to say that we are fully geared with the investment requirements, because both the radio subsidiaries are flush with funds. And having said that, we will also keep a very careful watch on valuations. We are unlikely to bid extremely aggressive amounts, because end of the day, any business has to return a very viable IRR. So if the bidding becomes very irrational and numbers run away, we may not be as aggressive as some others.
So has Red FM's participation been smooth so far? Because there were a lot of regulatory issues reported in the media with respect to the company's participation.
No, in the beginning there were some issues, but then we appealed to the respective high courts holding jurisdiction over the two companies, and we did get those reliefs. And after that, our participation has been pretty unhindered.
Okay, so by when do you expect the radio business to contribute significantly to the company's financials?
I think it's in a state of evolution, because radio is still not reached the kind of maturity it has reached in the West. So we still have numbers that are modest, because radio penetration is also limited to people who are mobile on the roads and who listen to radio while driving. So I think in terms of viewership and the reach being much smaller than television, which has millions of households watching it every night. So the numbers by definition have to be somewhat muted. But over time, these things can dramatically change. So when lifestyles evolve, when purchasing power goes up, when everybody starts riding to work in a car, radio economics can also transform dramatically.
Okay. Now, regulatory hurdles have been a big overhang on your TV business. Could you give us a sense on what's the latest you've gathered from the I&B Ministry and the Home Ministry with respect to the security clearances for the TV channels?
Whatever has been reported in the press is for everybody to see. We've not had any official communication from the nodal ministry here, which is the I&B Ministry.
All right, so we'll leave it at that. Thanks so much for joining in. So that's Sun TV saying that they will maintain margins at current levels. Their subscription revenue target stands at 11 to 12% for the current year. Let's slip into a very short break. On the other side, we'll discuss futures and options cues with Gaurav Bisa.